Hi everyone, welcome back to Be Rich. I have Shashwat with me today, and we thought we'll continue further with our investigation of American companies and American stock and talk about another company after the success of our talk about Microsoft. So, what do we have today, Shashwat? What have you brought for us today?
Today I wanted to discuss the company Unilever, which is a household name in most of our grocery lists. We see Unilever products which
Yes.
inhabit it. Unilever, ITC, and Nestle, maybe Procter and Gamble. But the Unilever company which I want to discuss today is the one listed abroad, not the one listed in India. The one listed in
Here,
India, I
Hindustan
believe,
Lever.
is Hindustan Unilever, which I think is
Yeah.
a bit too overpriced. It's
Yes.
around the P is way over 50, so I don't think it's worth discussing that. But I want to discuss Unilever listed in the US, and I guess it's also listed in the UK. It's a predominantly UK company.
Yes, a
Um,
UK company. Yes.
yeah, it's a UK company. The PE of the company listed in the US is 16. 16 is the PE of Unilever listed in NYSE. And its dividend yield is 4.4%.
Mm.
And it has a free cash flow of about 5 to 6%, depending on where the price lands. And its return on equity is over 30%. And fundamentally speaking, it seems to be a pretty decent company to invest in because your dividend yield already covers for
Mm.
most of the returns which you want to get from a stock. So, and this money is coming back to you directly through dividends. It's not being reinvested as such. And there's another attribute to Unilever which makes it unique. But before that, I want to also talk about some of the products which Unilever makes, which we use. So you
Mm.
have your Vaseline, your in the US, Ben and Jerry's ice cream is by Unilever. So
Correct.
that's for our international audience. That might be something people recognize. And your Axe deodorant is also Unilever. And
Yes.
Surf Excel and your Tide and all of that, your detergents pretty much are manufactured by Unilever. So your return on invested capital, which you get with Unilever, is about 17.6%, and the weighted average cost of capital is only around 4%. So
Mhm.
they're pretty much making a huge differential in terms of how much the cost of capital is which they're raising and how much they're making out of the capital. So
Mm.
17.6 versus about 3.5 or 4% is a huge differential. It's one of
Mm.
the biggest differentials in the companies which we'll be looking at in our series, looking at US companies. So that's
Mm.
something to keep in mind. And so Unilever is actually in a pretty unique position, which
Mm.
is because they are a fast-moving consumer good company.
Mm.
So they produce goods which are household names, yes, but also the thing is you wouldn't expect companies which produce goods worth 30 rupees, 40 rupees to have a huge profit margin. But it's
Mm.
precisely these companies which tend to have large profit margins because of one, the fact that if your Britannia biscuit went up from, let's say, 30 rupees to 32 rupees, you're not going to
Mm.
think much about it. But your
Mm.
2 rupees, or let's say it went to 33 rupees, but
Mm.
your 10% increase in the price of Britannia is a huge markup for them. So they
Mm.
have a lot of pricing power which comes with goods which aren't as costly. The economic concept here is called inelastic products. So
Mm.
the idea is that as price changes, the demand for your good doesn't change as much. So
True.
your revenue can increase a lot as you increase the price. So because of that, they have pricing power, and their
True.
operating profit margin is pretty decent, which allows them to produce free cash flow. The thing with Unilever is that the brand name is something which is associated with quality, because no one is going to think of Unilever products as substandard or subpar. When
Mm.
you think of Unilever detergent, that's the gold standard or top shelf sort of thing which we think about. So they have a huge moat. And so Unilever in the past 20 years has produced measly growth in terms of revenue and profit in the US. And in
Mm.
the past 10 years, it's been negligible. There's been no
Mm.
growth, or very little growth to write home about in the past 10 years. So
Mm.
Unilever as a company is not really a growth company. It's not like Microsoft. It doesn't
Mm.
give you 26% CAGR over the past 20 years or anything like that. However,
Mm.
Unilever has beaten the market over the past 2 decades with a CAGR of about 10% or 11%. And very
Mm.
recently, it had a downtick in price, which reduced the CAGR for it. But if
Mm.
you negate that lull, you'll pretty much
Mm.
see that Unilever has beaten the S&P 500 by a small margin.
True.
So the question here to ask is, how has Unilever, in terms of revenue, it hasn't shown much growth. But how has Unilever been able to show you CAGR? One, 4% or 4.4% in the dividend yield alone, you get that return guaranteed. And then on top of that, what Unilever does is in the past 20 years, about 26.5% of their share count has reduced in the sense
Hmm.
that they're constantly buying back their own stock with the free cash flow which they have. And their free cash flow is very sustainable. And even in periods of recession, because the products which they're selling are, FMCG products, they
Correct.
haven't been hit in terms of the quantity they've been able to sell and the price they're selling at. So
Correct.
even in times of inflation, there's something called shrinkflation, where they just reduce the amount of quantity they give you, but they still keep the price the same. So
Correct.
effectively, they're making a larger margin on that. So what's end up happening is that you're getting returns in terms of share buybacks, and this is reflected in terms of its book value. Its book value has compounded at a rate of 7.15% over the past decade, and its EPS has compounded at an even larger rate at 10.45%. So this company is doing numbers without showing any growth per se. And as for growth, now they've segmented their company into beauty care and your edible products and your detergents, household cleaning products. So they have about 5 segments which they've divided it into. And as of late, they had removed, I think, 15% of their senior management because
Hmm.
they felt that a lot of costs, overhead costs, which they wanted to remove. And they've been downsizing a bit and they're trying to streamline the company and show some revenue growth. So
Hmm.
that is something which Unilever has been working to do.
Hmm.
And I don't know whether you'll see stellar growth rates, but Unilever, I think, definitely has something to write home about, at least if you're buying it abroad. If you're buying it in India, the story is completely different. You're
Hmm.
paying a royalty and you're basically being sucked out of everything over here.
Hmm.
But if you're buying the parent company abroad, then you're getting all the royalty from countries like India, and you're also getting dividends in terms of dollars, and that's a huge benefit. So, what do you have to say about that? Yeah.
Yeah, what you rightly said is true. If you want to own Unilever India, the only way which is makes it sensible and profitable as an investor is to buy Unilever UK or Unilever US. I would strongly suggest Unilever UK, but we haven't looked at those numbers. But today we're looking at the
Yes.
Unilever USA numbers, and those are very nice numbers. And if you see their earnings for just the last year, I think it's phenomenal earnings they've had. But if you see over the period of 3 years, their earnings have not been so great. But that's okay. Most important is during this period of recession and coming out of the pandemic, they've been strong coming out of the gate. And if you compare their evaluation to their peers in the same industry, they're doing far better compared to their peers. And in
Yeah.
terms of price to earnings, like you rightly said, if you look at the industry average and where they are, they're like ITC right now priced in the US. They're at a good price point. You can look at entering Unilever. And you rightly said they have a very big moat. What as a consumer you don't realize is half the times when you're buying a product thinking you're buying a competitor's product, it's actually Unilever versus Unilever.
Unilever. Yeah.
Yeah, you don't even realize it unless you turn
Yeah.
around and look at the product and really look at closely and see where the logos are and it'll say owned
Yeah.
by Unilever. You are thinking you're buying Lux against Rexona, or you're
Yeah.
buying, and you're like you buy it and you're like, oh my god, Sunsilk is owned by them, Vaseline is owned by them, Lifebuoy is owned by them, Dove is
Yeah.
owned by them, Axe is owned by them, and like now you even take household cleaning products. It's like, so if you look at it, most of the brands which you see is all owned by Unilever. So they have a huge, huge moat and
Yeah.
they're well placed. And the thing is, these products they've already invested in the capital investments. The factories are in place, the distributors are in place, the supply chain is in place, everything is in place. So there's just a money making machine right now, what is running. It's like, and they're not like Apple. They don't struggle in these products for innovation. They don't need to
Yes.
come out with a new model. They don't need to do anything differently. Other than spending on advertising, they don't spend on anything else. So all are over the table consumables, and we all use it. And you need keep needing deodorants. You need keep needing soap. And once you fall into that brand trap, once you like an Axe product, you just end up buying Axe shampoo, Axe this, Axe that. Same thing with Dove. You know, once your girlfriend or your wife falls in love with Dove soap, you'll end up having Dove cream, Dove this, everything will become Dove,
Yes.
Dove shampoo, Dove conditioner. So that kind of brand loyalty also they have. So Unilever has a very strong moat, an unshakable moat. Only thing which is in question, which I see here, is they don't have a very stable record of paying dividends.
Mm.
The dividend payout is variable, which as an investor is something you can look into, but that is very small, really minute thing to look into.
Yeah.
If you're a value investor and you're going to hold it for 10 years, 15 years, it really doesn't matter.
Yeah.
And in terms of projected earnings, if they just keep what they have going on right now, you'll be a winner still. And by owning, like you rightly said, the parent company, you're not only an Indian market, you're all over in Africa, you're all over in Middle East. It's a truly a big, huge global company which not many people are aware of, not many people talk about. They're under the radar, they're not political, they don't get into stuck into any controversies. So it's a nice
Yeah.
business to be in. It's a nice company to own, and they keep their nose clean. So I think it's a fabulous company, and I think the price is also a good price to buy in. If you are looking at FMGC sector as a sector
Yeah.
you want to invest into, Unilever is a buy, I would say. And at any time right now, you can pick it up. And if you're looking at it holding long term, definitely pick it up. I would say
The thing with
more than a watch list, it's a buy list.
yeah, and see, that's the thing, right? Because yesterday we looked at Microsoft, and yes, it has your growth story, but then it's also priced in at 35 PE or so. But Unilever is a company which has a very unique positioning, which is that there's a huge moat. It's a cash cow. It's just you're just milking away at free cash flow from it. But one interesting thing, or rather one thing which is concerning me, is that yes, they have debt. It's
They
not that
have
they're
huge
debt
debt.
free.
No,
Yes.
they have huge debt. Their debt to
Yeah.
equity ratios at 130%.
Yeah. And that's concerning me because that's not something which ITC has. ITC is a cash cow, but ITC is relatively debt free. So
Yes, but if you look at their, the overall thing, they can easily pay down this debt and get rid of it if they want to. It's a manageable debt, is what I think. Maybe I'm wrong. I don't know. There has to be
yeah,
something seismic to happen for Unilever's face such disruption where they are going to be in such trouble where they would not be able to pay this debt. To be very honest, the current topic disruptions we're talking about are not going to affect them. Climate change
yes,
doesn't affect them. If we're talking about supply of palm oil, yeah, okay, but
but that's
I don't
one
know,
niche of their
one niche. But if you look at the rest of their products, they're pretty safe. The war in Ukraine is really not going to affect them. The chip
yeah,
shortage is not going to affect them. AI technology coming is not going to affect them. So
yeah,
this is like a bread and butter which every human being needs, and they're making it. And for a competitor to come up and scale up to this level and to engage them in a global footing like this, it's very difficult.
right.
I mean,
Unless
it can happen, but it'll happen over such a long period of time for another Unilever to come and build itself. And the
you'll see it
phenomenal thing about
happening.
yeah, and the phenomenal thing history Unilever has is anybody in the remote possibility looks like they're going to be a future competition, they swallow them. They just
Exactly.
go, they just go buy them out. They'll be like, okay, how much do you want? And any
Yeah,
family-owned brand, who starts
doesn't
off,
want to go up
they,
against Unilever.
no, they hope that they get noticed by Unilever and they're bought
Yeah.
out by Unilever. That's how it
Yes.
works. It's like how startups come and they want to go into IPO. They want a venture capitalist to go into IPO. Most of
Yeah.
these cosmetic companies would start off in a basement in someone's house. Their hope is some Lakme or some Unilever or some Palm Olive comes to them and says, "Okay, how much do you want?
I'll
We want to buy
purchase.
your
Yeah.
brand up. You want to be bought up because you don't want to go through the hassle of building and
Yeah.
networking and going global. Yes, there are few I would say who think of it like that, but majority of the people who start get into FMGC, they want to be bought up. They want to make some niche product, build a brand, then hope someone comes and picks them up, and they make their
And
profit and move on.
I think Dollar Shave Club was one of those companies which Unilever just came in and bought up because
Yeah,
I think over the past few years, Dollar Shave Club aggressively marketed all over YouTube. All YouTube channels were saying, "Okay, please buy Dollar Shave Club. We will send you all the products at home. You don't need to go and buy anything." And very
correct.
quietly, I stopped seeing those ads, and it turns out that Unilever's gone in and bought up Dollar Shave Club.
Correct.
And
And
and so
once
I mean that
once they
yeah.
buy it, then they can decide if they want to keep it or they can just extinguish it. They can stub it up.
Right. And that's the unique thing about Unilever, which is that they're a cash cow, which means that they can do whatever they want with with the free cash flow which they have. Because as you rightly said, a lot of their capital expenditure is already done. And if they want to unroll out let's say, a new detergent, they just have to produce it at the same factory they were producing all their other five
Correct.
detergents.
And as a
Just,
consumer, you do not know the difference
yeah,
between
just
Ace and
yeah,
Tide and whatever. You do not know. You just a sticker which you're seeing.
Yeah.
And if the marketing pushes enough on you, you get bitten and you're hooked on. You'll switch and you'll try it. You think
Right.
some new smell, some new thing, some new guy sponsoring it, some celebrity you're following is pushing it. You say, okay, let's try it. What's the harm? Get a free sample. And they've got their marketing on point. They've honed it. Most people use a Unilever strategy in marketing their products.
What's the Unilever strategy?
No, the way they give free
Oh,
samples,
yeah, yeah, yeah.
you know, and any guy who joins the company is put into, remote locations. He has to learn how their product is shelved, how their product is sold, talk
Right.
to the dealers, and you work up the ladder slowly and become a manager. You just don't overnight jump up. So
Yeah.
each guy has really experience with his own brand, and he knows internally how the company works. So Unilever is a buy in my book. Even his debt, that's what we rightly spoke about. With the debt will be something to worry about if they have some future where they cannot pay this debt down.
Yes.
For some reason, they're squeezed. Interest rates go up or whatever happens, and they're squeezed. They can't pay it.
But their
I
yeah,
think they can easily pay it.
and their cost of capital is only 3.5 or 4%. So I don't think
Correct.
there's any problem with that, because even if I mean, they just have to stop paying dividends or pay a little less dividends and they've already paid it off. There's no
Correct.
sort of problem which they have.
Yes. And if they give any special warrants or special issues, people are ready to buy it. People are ready
Yeah,
to
and
give.
they have enough money where in the past year they extinguished their stock by 2.5%.
Exactly.
So right now their debt isn't a problem per se. It's more something which they're happy to keep. They've shelved it away, saying, "Okay, we'll deal with this later. Let's continue buying back stock because I'm not worried
Correct.
about this right now."
Correct.
And so, if the market does crack in the US, which I think there is definitely an opportunity for, I think that if Unilever goes to, let's say, a PE of 13 or 14, which is very doable from a PE of 16, I think
Yeah.
it's possible to slide by 3-4 points. So I
True.
think you have a good opportunity to snag Unilever. I mean, you can continue buying now one or two stocks, but when the market cracks, I think you're looking at a wonderful opportunity to purchase because when the market cracked during COVID, we snagged ITC at about $138, $140,
True.
and the dividend yield we're getting on that now, we're above 10% dividend yield on ITC at the prices we bought it at. So if yeah, sorry,
No, and you're rightly saying the market will correct with this
yeah,
all this political turmoil which US is going through right now, and all the confusion which is happening. Mr. Market will get nervous and he'll
right,
dump everything. He'll throw the house silver also out with the bath water. So when he's throwing the house silver, you can wisely buy it, knowing that.
yeah,
And it's a very old company. It's not like a upstart.
yes,
Unilever is a very old company and it's been here forever. And I don't see any future where there will not be a Unilever.
it's a pre-independence. I mean, it's older than India itself.
Yeah, it is.
So
And
that's the company. Yeah,
yeah, so today's a great company brought to us, Shashwat. Thank you for bringing Unilever to us. And I do think it is a buy right now and it's a buy going forward. It does correct. You can add
that
on
being
to
said,
your.
we're not investment advisors, and we're necessary
Yes,
that
we
we
are
tell you
not
this.
investment advisors. These are our own personal views. Please
Yeah,
understand. We're not gurus. We're
yeah,
not market mavens. We don't claim to be either. We are
yeah. Please
absolutely.
consult your
Yeah.
investment
You
advisor before
continue to
you.
invest. Yes, please talk
Yeah,
to the relevant people in your sphere to find out if it is a buy for you. These are our personal investments. This is
yeah,
actually like sitting in water cool talk between me and Shashwat about what we are thinking about, what we're thinking of buying, and we're sharing our ideas with you and our thoughts with you. You're completely welcome to investigate further on your own and decide if it's a prudent decision for you to buy Unilever. Something we're doing, and something for
yeah.
you to, if you're interested in US market and in Unilever, something worthwhile investigating. Is all that's what we're saying. We're not like saying you must buy it, which is rightly. Thanks for correcting me on that, Chashra.
Yeah, just wanted to put it out. Yeah,
Yeah, it's true. All of our advice, please do take it with a ton of salt. Do not claim to be market experts. We are not
yeah,
advisors, nor are we claiming to do selling anything here. It's just purely our ideas, retail investors, what we think, what we feel, we share with you. I hope you enjoy these videos. Thanks for coming to Be Rich today and watching this video again with us. Do subscribe to our channel. Do share these videos if you think it's something interesting your friends would like, your family would like. Turn on the bell notification so whenever we come out with a new video, you'll be notified that we are up with the new content. And we would like to thank you again for joining us today at Be Rich.
We had a meeting in Singapore. I was very pleased with the results. Indians received me with great love and affection, and I enjoyed my time in Singapore. The meeting was a big success, and I could meet up people from various walks of life. I miss going to Kuala Lumpur, which is very close to Singapore, just 4 hours drive, and I have been asked to come there. So my team decided on the 11th of June, Sunday, we would do an event in Kuala Lumpur. If you would like to meet me in Kuala Lumpur, kindly send a message at the WhatsApp number given below and or drop a mail to the mail ID given below. My team would contact you at earliest. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.